much. Let me get my screen going here. Can you see my screen?
Yes. Yes, we do.
Okay, fantastic. First of all, congratulations to all of you. My understanding is that you are the survivors of a long process that had more than 1,000 applicants, and it all ended up on you. So let me say, without any pressure, we are all looking forward to see the results of your work and the contributions you can make to the world. So, you know, take this conversation today as both an encouragement and an expectation that, you know, out of your work, we get a better life to all of us, because we are in desperate need worldwide. Let me also start by expressing my gratitude to the government of Turkey, the Ministry of Foreign Affairs, and all our partners in Turkey, who has been supporting the implementation of the Impact Accelerator second phase, and also been supporting our Istanbul Center for Private Sector and Development work since 2012. I have never thought that I would have spent so long without going back to my darling and passionate Istanbul, but that's the word we have to deal with. And I, as I said, like to congratulate you all on this. Now, what is the challenge? What are we dealing with, right? You know, before COVID, right, we already had a estimated financing gap to support the Sustainable Development Goals, the SDGs, of about $2.5 trillion a year, every year for 15 years, right? Now, post-COVID, this gap has actually increased now, you know, and we are looking at a gap at about $4.2 trillion. The issue is, to be honest, is it is not necessarily a gap from the point of view that there is no money in the world. Despite COVID, global wealth has increased and stayed steady at $379 trillion. Now, if you don't want to take total global wealth, you know, and if you want to, for example, stay just on resources under asset management, you're still dealing with $80 trillion. So the truth is, $4.2 trillion, it's a lot of money, but it's only 1.1% of global wealth. So the problem of financing and accomplishing sustainable development goals is not a problem of quantum of resources. It's a problem of alignment of existing resources, both public and private resources. Now, it is also pretty clear that, as I said, it's an alignment of private resources as well as public, and it is impossible to achieve the Sustainable Development Goals without the private sector. You know, the private sector is the engine of job creation, is the engine of capital flow, GDP, you know, innovation. It's all in the hands of business. So the question is, if the challenge is alignment of capital flows as well as alignment of business models towards the goal, what is the set of incentives, the set of regulations that need to be put in place by governments, by policymakers, and what are the set of consumer behaviors as well as corporate governance that will make that alignment a reality from the private sector. Now, the good news is private sector needs to make money, and that's not questionable. I'm not a UN bureaucrat that's going to tell you and say, do all of this for the sake of, you know, your heart, I truly hope that every one of you here end up being a millionaire, right? By doing the right thing, by doing the business model that delivers you the money that you expect to have in your life, as well as social and environmental returns at the same time. Now, there's an interesting calculation done a few years ago at the beginning of the SDG era that looks into what is the financial opportunity inside the Sustainable Development Goals, and it's $12 trillion a year. Now, remember, the gap is 4.2 post-COVID, right? This number was pre-COVID. Well, again, 4.2 of gap to the SDGs against a 12 trillion a year opportunity for the SDGs to be unlocked by the companies that put the SDG at the center of their business model. It's particularly relevant for you because it's my understanding that we are dealing here with a call for you as a startups around financial inclusion in agriculture. On the financial inclusion side, right, you have 69% of the adult population owns a bank account. But there are 1.7 billion people in the world that still remain unbanked. Half of the unbanked people include women, poor households in rural areas, and out of the workforce. On average, account holding exceeds 90% in high-income countries, compared to 70% in the emerging developing regions with the highest levels in East Asia. Now, on the agriculture sector, they estimated the digital agriculture market size in 2021 is $15 billion. There will be 9.7 billion people in the world by 2050. Feeding them will require increase current food production by up to 98%. And that increase in food production needs to be done in a way that respects the environment, that does not, emit climate, greenhouse gas equivalents, and is done in a sustainable agricultural way. So I think it is very important that you recognize that those opportunities need to be done the right way, as I said it before. So what are we doing as UNDP globally and in Turkey and your partners in that sense? So when I was asked to create the finance sector hub, UNDP has been working on private sector works and public finance support for decades. What we didn't have was a common approach that was to generate a coherent, right, capacity across our work that would in time make a scale up of our impact and our results. So that is this coherent approach that we put together. You have 7 areas here. The darker blues on the left side are the private sector side of our approach, while the lighter blues on the right are the public finance way. But those things are completely intertwined, right? You can't, one of the best ways to incentivize the alignment of business strategies, and business models for the SDGs is through financing strategies that governments can put in place as part of the national financial strategies, or by using the budgeting process of a government to flip subsidies away, for example, fossil fuel towards renewable energy. So there's a lot that goes across this wheel that you see in there to generate a systemic change on the finance industry and private sector. Now, for us, work with private sector is so important that behind this wheel, we actually have a private sector strategy, which was designed, this design was led by the Istanbul Center, and its implementation today is led by our Istanbul Center of Private Sector. We actually want to see $1 trillion of private capital being aligned, what I mentioned earlier, to the SDGs by 2030. We're actually thinking that we could get to $1 trillion between public and private capital alignment by 2025. That's what we are aiming for, probably in the next strategic plan of UNDP. For us, working with the private sector means you unlock the private finance, you align the business models, and that's where you are important. You are startups, right? So the question is, how does your business models coming out of this acceleration process, are built in a way that the SDGs are essential, are in your DNA? That's what we've been advising. We have colleagues here from our business call to action, and I think you are going to interact with them throughout this process. And we've got this program called the Business Call to Action for more than a decade, and it's just about getting companies to look inside, to look at their business models, and to realize, how do I become more inclusive, more environmentally conscious on my business models? Not CSR. The era of corporate social responsibility is over, right? You are not going to save the world, and you're not going to be a critical part of building a better world and building back better from the COVID by doing a business in one side and taking a crop at the top and making nice little corporate social responsibility. That's not the future anymore. So we do have our private sector strategy, which has a series of service offers, which then joint with our public finance build up that wheel that I showed you. Now we have a few flagships initiatives that is at the back of our common approach. Let me walk you through a few of those now. So the first one is, as I said, is that linkage between public finance and government financing strategies, which include the private sector on financing strategies. It's essential. What we found out that over the years is that governments own SDG plans, which they report back to the United Nations every July, don't have a financing strategy behind. Now, you are a startup business. You know better than I do that a plan without a budget is an hallucination. A plan without a financing strategy will never work. Well, a lot of government thinks that that's fine. So they go on and create the national development plans. The SDGs, it's at the top and it's at the center of those plans. But then ministers of finance spend money in a completely, disassociated way. So they integrate national financial frameworks, which are operating in 71 countries now. It's an attempt to do this vertical integration between national plans and financing strategies, including budgets. So the money will come towards what a government has decided to do for its society. Now, a lot of the initial work that we've been doing this for about a year now, a lot of the initial financing strategies designed that we are seeing it are really, really taking into consideration a whole of society financing approach with a lot of the private sector inside, a lot of the business coming in. Now, the good news for business is as governments starting to design those financing strategies and they look at resources across the board, they also realize that they have to do policy reforms. So the expectations that they have that the business capital will fly into their plans can become a reality. You can't really just say, oh, I needed 20% of my plan to be financing from business, but then you don't realize that business is not coming because they don't have an enabling environment, because they don't have access to a rule of law, or they need some subsidies and they need some elements like this. So there is a growing recognition and a growing surface of policy reforms that governments will need to do, right? And we at UNDP and others will support it to be able to concretize the flow from the private capital in that sense. Now, those are the countries where we're doing the Integrated National Financial Framework. And as you can see, we are doing one in Uganda, we're doing one in Bangladesh, which is the places where you are going to be playing with your projects, your ideas. So keep an eye on that. Now, the second, and I think an important one for you as you are designing your interventions, is our SDG Impact. So we have a study, the investment cycle, And we talked to a lot of global investors about this, from asset owners to asset managers to companies. And we just designed this program in which we're putting in place decision-making standards for private equity, for bond issuers, and for enterprises, right? And those standards they are already being used. We just had, for example, the new development bank, the BRICS Bank in China, issuing a bond fully aligned with our standards and raising $767 million in the Chinese market. And we have a huge pipeline going on this. And I would think would be very interesting through your journey now that you perhaps consider adopting some of those standards and some of those practices into your business models as they're going forward, to provide you with some, hopefully, access to capital later on in that sense. The other thing that will be very interesting is to consider, that's the standards that I've mentioned, will be to consider, let me go back here, how your business models, how your initiatives later on could actually be featured into our SDG investment platform. So we have created a methodology in Brazil, a couple of years back, to transform development data, transform national development plans into concrete investment opportunity areas. We've done those, we call investment maps, in 14 countries. We've got about 277 investment opportunity areas, then 10 more are being developed now. We've done one for Turkey, for example. And now we've put all of this data in a database, in a platform that any investor in the world could look at. So I think that's another important opportunity for you to have a look at on how business models and how returns of investment are being paired up with the SDGs concretely and shown to investors, because I think that's the future to attract environmental, social, governance, ESG capital going forward. Our third risk flagship, it's our insurance and risk finance facility. We are basically trying to accomplish two things with this work. And we've been working with the major insurance and reinsurance companies in the world, is to increase the microinsurance baseline, to increase the number of populations around the developing world that have access to microinsurance, being on agriculture, being on natural capital, but at the same time, increase the market for sovereign and sub-sovereign insurance against climate, primarily. That's very relevant in a country like Bangladesh. Again, one of your countries you're going to be working on, because we see how vulnerable Bangladesh is to sea level rises and cyclones and storms. So another important piece of this, and think about it while you're designing your initiatives, what role insurance can play in that. Finally, digital finance. The world is going digital. We all know. Here we are talking through a Zoom. Who would believe on that? I'd much rather be with you all together in Istanbul. And we are really putting a lot of emphasis in helping the world go digital. From SMEs, we have a whole program. Again, the Business Call to Action is helping a lot on this. We have a whole program in which we are trying to get a digital transformation of SMEs. They will not survive in the world if they are not operating in the digital space. Now, it's more than just, the hardware. It's how do you think your business model, if you are a small company in Kampala or in Dhaka, from a digital point of view. And that is a lot of work to be done, and a lot of support to be put in place. We also need to think about how do you support governments to become digital, and then you've got all the connection functions, if you want, of the financial service industry that are becoming digital, from payments to all other aspects. So we are working a lot of that. And as you go through your journey, if you want to hear more, let us know, and we'll bring it back to you, some of the lessons and some of the experience that we have. We have a great program that we're doing, again, in Bangladesh, where we've been using digital to aggregate small savings to then finance small rural infrastructure, which is essential for tertiary roads and water and elements like that. Now, as UNDP, we have the privilege to advise governments at a very high level. So we are, I have the honor to be supporting for a couple of years together with the OECD, the G7. And this year, I'm actually the head of the secretariat of the G20 Sustainable Finance Working Group. We are also working within the UN system, right, on pushing some innovation in terms of regulations and policy and advocacy around the conversations that we are having here. Now, my message to you, colleagues, as you start this journey is the world is changing very, very, very fast. The Biden administration just issued overnight, right, for example, a executive order on financing climate risk. And the entire United States government has 120 days to put in place financial disclosures towards climate risk and budgeting assumptions for the United States government and so on and so forth. The European Union, it's already there. It's been there for quite some time with regulatory frameworks for sustainability disclosure, and China also. So the three big players economically in the world are all committed to change the rules of the game and to move what has been a set of voluntary standards, right, to mandatory standards. So as you come in and you start your journey as entrepreneurs, keep in mind, in a few years, you want to access capital, people are going to be asking you, how you're measuring, what is the risk to your business coming from climate, how you're measuring, how you're reporting, what are your exposure? And without that kind of data, getting capital is going to become more expensive if you get it at all, right? And it's not just to climate. Climate is the spearhead now, but it's fast going to move from climate to your risk exposure, as well as your contribution to issues of nature and biodiversity, especially for you guys working on agriculture, and the social aspects. To give an idea on how fast things are changing, in the last 5 years, we've gone from almost a non-existent market for green bonds to a market that's about $1 trillion already. Now, it's still 2% only of the global bond market, but it's growing faster than any other aspect. In the last 9 months alone, there was $720 billion of issuance on social bonds. A lot to do with the health sector to respond to the pandemic. Amazon, last week, Amazon alone issued a $1 billion green bond to finance its own green transformation, buying its electric vehicle fleet and so on and so forth. So this market is moving fast. And the regulatory framework, which was lagging behind, it's about to catch up. By the end of the year, I hope that our Sustainable Finance Working Group at the G20 will be putting forward policy recommendations for the G20 governments, which will most likely be accepted in terms of transforming the regulatory framework and the reporting coming forward. So keep this in mind as you build your business. Now, I've already started to talk about this whole thing about impact investment. I think my important message to you is a few years back, we were creating this kind of niche side of the financing industry called impact investment. I actually think that the world is moving in which these words are going to have to flip it. So it's not impact investment, it's that all investments must have an impact, right? And this is no longer going to be a little niche, right, in the industry, but actually be a demand for the entire financial sector industry. So I think you that are going to have access of capital in the future need to keep that in mind as you build your business from scratch right now. Now, here's the trends. I think the most important trend is the trend on the right, is the ESG growth. It's a massive growth. It's a slightly more different than the traditional defined impact investment. Now, what is going to happen with this industry of ESG is, as I've mentioned on the regulatory side, is that there will be a squeeze of quality on what is ESG. A lot of this $55 trillion that today calls itself ESG, it's wash, right? And I'm afraid to say it's either green, blue, rainbow, SDG, whatever you want to say. It's a lot of things here that has no integrity. They've survived it so far because, you know, the regulatory framework hadn't paid attention. That's changing. So a lot of, I could actually predicted that this money, 55 trillion or whatever, it's actually going to go down in a couple of, in the next couple of years, because a lot of people are going to say, no, you are BSing here. Get out of the conversation. For example, the European Union has put a taxonomy on green, and it's very clear. You either give me this, or you cannot call yourself a green finance or a green bond or a green company, right? So the rules are changing. I can see this money going down and then coming back up again in a few years, but coming back up with integrity, right? With an essential part of this. Now, the integrity will come from strong impact management and measurement. And my colleague are going to take over from me in a moment to talk about that and how perhaps we can help you build it at this moment in your journey, that strong IMM that would allow you to show the world, to show capital, to show regulators that you have the integrity. You're not only solving a global problem, making your buck, making your money, but you do it in the right way, and you can prove it that you have the integrity necessary to do this. So I think that is perhaps the kind of messages that I wanted to talk to you. Oh, this is the investment platform that I was talking to you earlier. I knew I had a slide about that, but it's here. So hopefully I challenge you that, you bring your business out of Uganda and Bangladesh into that. We will be delighted to feature you here, and expose you to capital providers as time goes by. I think I'm done here, and I will happy to hand the floor to my colleague, that she is, Rabel. You take it over. Tell me what to change it, and I'll change the slides for you.
Oh, okay. I can all happy to share my screen too, Marcos.
Don't worry, I've already got my screen on. So just
perfect. Thank you so much. And happy to be here with all of you once again. I think we last spoke with a much larger group at the end of March, and I'm happy to say that you have made it this far in your journey. So congratulations for being here, for pushing through, and for surviving, as Marcos said. So I'll talk to you about a couple of things today. I wanted to first look into what UNDP has been doing in accelerator programs in general, and then build over from what Marcos has been talking about on impact management. So Marcos, if you can help me with the next slide. So what's sort of unique about how UNDP has been working with acceleration programs is that it not just provides startups with business acceleration, but it does it with the SDGs throughout the journey of scaling with startups, and really trying to build that capacity to make it more robust in terms of impact measurement and management. And that is where, as Marcos said, the integrity will lie going forward. And as the number of accelerators growing globally, what makes you stand out, and what makes UNDP a good partner to have in this journey is that it can really allow for identifying and making a real contribution and creating that impact and knowing where true transformation is happening. So in the next slide, we can see a number of ways that UNDP has been supporting acceleration through its acceleration journeys startups. On the technology side, it allows us to make connections globally with governments, with investor networks, with technical expertise, whether it's through sectoral focus on climate change, financial inclusion, or sustainable agriculture, leveraging different initiatives within UNDP, but also tapping into specialty networks. So we have that broad overview, the zoomed out perspective that we can bring in for startups and help them sort of create that impact story with real true contribution that can help startups gain that global visibility. We also are able to tap into different UNDP initiatives so that to bring convergence. Marcos has mentioned a few of them, such as the investor maps that we're doing in a number of countries, as well as other acceleration programs in Denmark, in Philippines, Indonesia. I think the next slide will talk a little bit more about that. But just to say that there's a lot of different types of initiatives and solutions that we can bring together, especially now that we have these digital platforms. So that's one kind of thing that sets it apart. The other, on the impact side, what we work with when we work with startups is we help them grow both their impact as well as business model, and then define the metrics and the parameters for how they can frame their SDGs and grow their impact, and have targets that are ambitious and measurable. And on the business side, we're looking at how we can connect you to the right funding sources, pitching to investors, supporting fundraising, and having the right incentives to grow in a strategic way. So that's a little bit about the strategy towards accelerator programs that UNDP has within the Impact Venture Accelerators. And the next slide kind of shows the landscape of where we've been operating. At Armenia, Indonesia, Philippines, Singapore, to name a few countries, and it's across the life cycle of startups, from pre-seed to early growth, all the way to establishing corporate innovation. And in total, in the last few years, we have had about 430 startups supported in 46 countries, with the help of a number of partners, from 500 startups to Draper Venture Network, Deloitte, Impact Hub, SAP. So it's a really had a lot of growth and momentum in the space. It has a lot of interest, not just from the investors, but a very broad ecosystem. And this is work that is growing for UNDP. So one thing that really a flagship tool that we use to support startups is on impact measurement, and this is built by the Business Call to Action. It's an online tool that helps companies as well as investors synthesize or just break down this very complex universe of impact measurement in a user-friendly way, so that you can, for yourself, create a tailor-made approach on what works for you as an organization at the stage where you're at. So it offers step-by-step guidance in modules to build that framework, collect data from your stakeholders, and just and to get started on that journey on impact measurement, no matter where you are in your business growth. There is things that you can do, like selecting the right KPIs for yourself, starting to talk to your stakeholders on what change they're experiencing, and the lab can guide you on that. The URL is right there, impactlab.businesscalltoaction.org, and I encourage you to go check it out. And then this is just an example, a use case of a company like yourself that went through this process in the Impact Lab, and has a case study on this. So they use the Impact Lab to create a plan, define their indicators, standardizing it with indicators from IRIS Plus or the Global Impact Investing Network to make sure that it's aligned with all the taxonomies and the frameworks that are going on in the world on impact measurement. And then it used the Impact Lab to collect data from where it was operating. It's an internet startup that was working out of Denmark, but had operations in Ghana, Mozambique, and India. So it went and using the Impact Lab collected baseline data and is using that data to improve its decision making. So it goes from measurement to impact management, and it, using the insights, it used that feedback from impact measurement to improve its program, realizing what are further training needs of its operators, and what it can do to make its business model better. And after all of that, it can then concretely say where the real contribution on the SDGs lies and how it's going to continue to improve that. And then just some final thoughts in the next two slides on impact investing, as Marcos touched upon, the fact that it's not just a particular set of investments that will have impact, it's that also the realization that all investment has an impact. It's about, when you understand it, is this you can connect to the right investors that are aligned with you. So just a few sort of tips and recommendations as you go about looking at who to partner with, what impact investors right for you. Just keeping in mind that it's very important to have intentionality clearly stated. So how exactly is your business model going to generate that impact and what that's going to look like? Even if you don't have it now, having that intentionality spelled out is very critical. Then also what investors are looking for is what additionality can they bring into it? So when they invest into your company, what will be the additional contribution towards those positive outcomes? And then the transparency in that. They're also looking for, of course, what is the elements in the team? Is the founder motivated? Is the team, has a can-do attitude and is looking to do problem solving, and is not undeterred in crisis? And of course, a solid impact measurement framework to know that even if you don't have the full rigorous data today, what are the steps you are taking to gather it? What is your outlook towards measurement? How are you thinking about monitoring over time, and whether your forecasts are honest and transparent in that? And another sort of ingredient in the recipe is a viable business plan. This is a bit of an obvious one, that you understand your market, your product is fit for purpose, it is solving for a problem that is very well laid out, and that the business has a good track record, not just in terms of financial track record, but also that there's a clear strategy for growth and a transparent forecast. And one more thing that I would also add here is that not just looking into investors, but also look into connecting with the whole ecosystem. There are other ecosystem players like accelerator programs, intermediaries, angel investors, and also other venture philanthropists, and bodies like SOCAP or Global Impact Investing Network or the GSG. So look into the spaces where you can really connect with a broad range of stakeholders and not just directly speak with investors. And lastly, just a final kind of thoughts on the integrity when it comes to the SDGs, and how you're at the heart of it. What really matters is that you are making an honest contribution, a transformative contribution towards the sustainable development. And just 3-4 points to keep in mind here is that, in your mindset, start thinking beyond shareholder investor into all your stakeholders. This includes your employees, your suppliers, your producers. Who's experiencing the change through your business activities, and how can you best optimize that? Also thinking about moving from compliance today to creating impact over time, and to recognize that this is a journey, that at the very least, just starting to adopt best practices in environment and social contribution today, but then going towards maximizing value over time. And also to think about the ABCs of impact, which means that making a positive contribution, and it includes, at the very least, not creating harm. So it's very equally important to know that if there is negative impacts being created, that those are mitigated. It cannot be a trade-off that positive impact in one area is washed with negative harm in another area. So you have to first start thinking about mitigating or avoiding harm, and then about benefiting your stakeholders, and then finally towards contributing to positive solutions. That this is a journey that you must take to be true and having integrity towards the SDGs, and then not letting that deter you or intimidate you, but to let that motivate you to create ambitious goals and tell a true story on how SDGs are at the heart of your business. I think I'll stop here, Marcos, and yep, together we can achieve more.
Thank you. Thank you very much. Colleagues, perhaps my last word before open up for any questions and conversations that we can have here is this, starting a business, it's difficult. Making a decision to go on through this journey is complicated. And then, you got people like me and Rabel and others saying, oh, on top of having to have the best business idea and the best business plan and figure out your cash flow and figure out the business model, you actually got to figure out how you get all of this impact management, this integrity and the SDGs inside your business. You could say, you might throw your head out and says, oh my God, I'm going to go home and do something else with my life. No, be a bureaucrat like those guys, because I don't have to make those decisions. You do. The challenge that you have is that you're living through a transition. You're living through a transition of capitalism. You're living through a transition of what society values. You're living through a transition of purpose. Inshallah, 10 years from now, 15 years from now, nobody's going to think twice about what we're talking today. It is going to be the normal. We are no longer going to call impact investment. We're just going to say investment, because all investment are going to want that impact. We're no longer going to say sustainable finance, because our finance is going to be sustainable, right? So you can see these as overwhelming, right? On top of everything else you got to do. What I would like you to see is the sustainability of your own business, of your own journey that you're starting now, comes through this. You want to be the next billionaires of the world? I don't know if that's what you want to do, but if that's what you want to do, that is what you're going to need to do, because there will be no successful business, right, in 20 years that does not deal with those issues. And governments are not going to let you be successful unless you deal with those issues, right? That is perhaps the biggest change, is that up to now, this conversation was about voluntary. This conversation was about, yeah, I'm doing good. It's in my heart. I feel good, right? It's changing, and it's changing very fast, and if you want to, whatever you design in Bangladesh and Uganda, if you want to raise capital for that in Europe today, you better put all the stuff we've been talking here into your DNA, and a couple of years we'll be in the United States, a couple of years we'll be in the capital markets, So I don't want to overwhelm. I know you can do it. I wish you all the luck in the world, and I'm happy to deal with any questions and any pushbacks and anything you want to. I'm going to look at the chat. I know there's some stuff here, but I had my full screen to project it, so I couldn't read anything up to now. So in the meantime, put your hand up and I'll take you, or maybe AJ can facilitate. I'm happy to do it. Doesn't matter. So go ahead.
Okay, great. Thanks a lot for all the insights, Marcos and Rabail. Actually, on the chat, I've seen that Pelin Hanım from UNDP has joined us. Maybe she would like to say hi to our teams and you. That's what she wrote on chat. Pelin Hanım, would you like to say a few words?
Sure. Thank you very much. Dear Marcos, dear Rabel, dear founders, thank you very much for joining us today. And dear Marcos, this was really inspiring as always. When you join our meetings, you bring this light, and we are grateful for that. The transformation is not easy, but in 2 years, I remember the first meeting in Istanbul that you have and your team delivered the impact management, SDG Impact training. And in 2 years, there is a lot of progress that was achieved globally. And thanks to you and your team, We are here to support all our founders to adopt this change. They are very lucky to be in this organization with UNDP support, with Ministry of Foreign Affairs support, but our global muscles, our global mentors like you are on board, and we feel very strong in the field to take this challenging world ahead. And I just wanted to thank you very much, and also Rabel, and all the best for your new journey. You will be on maternity leave soon. So we are all sending our greetings from Turkey. And Marcos, thank you very much again for joining us. Thanks.
Pleasure. So let me grab a couple of questions here. Isabel, you might want to look at some of those as well. But let me start with Aeon's point about metrics and reporting, because that is something I'm in the middle of it globally. You're right, and that is why the regulatory framework is changing. The system right now is a mess. BlackRock itself or any big asset manager can create its own checklist of ESG. Can go through its own checklist and can declare to the world that is ESG without anybody ever seeing what are they measuring, right? And each company have different ESG criteria. So you've got a problem. That's why I said that out of the $53 trillion considered ESG, I would say a third, if not half, is really BS, right? Now, what is changing is, so you've now got a determination that the IFRS, right? The international, whatever for, the board that does accounting. Aeon, tell me, remind me the acronym.
Yeah, International Financial Reporting Standard.
Thank you. So they are creating by the end of the year, they're going to create and establish, that has been decided, a sustainability standard board. We are actually going to be advisors of that sustainability standard board. The IOSCO, which is the International Organization for Capital Markets Regulation, right, is overseeing the IFRS process and is creating this consultative group to which we are going to be part of. So by the end of the year, you're going to have the first body in the world that will regulate and come back with the global standards. So all this mess that you have now is going to be rationalized, right? Now, the IFRS and the IOSCO's mandate is still on listed companies, right? The European Union, in its own regulatory framework, has already said that listed companies or large SMEs, even if not listed, are coming. Right? So on top of that, and that is where it becomes quite interesting, is this conversation with the IFRS and IOSCO started with what is called financial materiality. So the standards they were going to put it in place, the standards they are working on is the so-called financial materiality. In other words, it is the quantification to your bottom line as a company of what you need to report to stock exchanges, right? Now, we know that your impact in society is bigger than what is financial material for investors. So the tension in the last 9 months and the fights in the last 9 months was, are we creating a system that only cares to serve the needs of investors through my financial materiality, or are we creating a system, right, that serves the needs of all stakeholders? Therefore, I need you to tell me all of your impact in society. We are halfway through that. So there is a commitment on IFRS and IOSCO that this needs to do with dynamic materiality or double materiality, right? So in other words, the integrity of your impact in society needs to be measured and reported. Now, we are starting with financial materiality. We're starting with an emphasis on climate. Part of that is the second problem, is data availability. There is not enough data to measure everything.
Correct.
There's not knowledge on how to measure everything. It's easier to measure a ton of carbon emission. And again, for you guys who work on agriculture, remember, if you combine all land use, agriculture, forest, cattle ranching, everything, the number one representative of greenhouse gas emissions is land use management. It's more the energy. Okay? So if you are going to work on agriculture and you care about those issues and you want to have a future, take into consideration that you're dealing with the number one, emitter of greenhouse gases. It's land use management. Not just agriculture, but all of it, right? So we are not there yet, Aeon, but the system is being generated. Now, I'm delivering for the G20 by the end of the year a set of policy recommendations on sustainability reporting as well. And the G20 and the IFRS are starting to talk. Remember, the G20 is 85% of the global economy. Global GDP, 85% is in the G20. So what we managed to get out of the G20 quickly becomes global standards and norms. So we're not there, but it's coming. That's why I've been telling you guys, don't think this is about the good of your heart. Very soon, governments will tell you you have to do this, right? Let me take it, because I think there was a very interesting question by Bipasha Hussain in Bangladesh in terms of you're not an NGO. Yeah, you're not an NGO. I come from the NGO world. I spent 17 years. I know Bangladesh. I was there in 98 during the floods, responding to the floods, right? I've traveled your country up to north and everywhere. You're right. When you talk about this conversation of impact, hardcore investors will look at you and say, I don't care about you. Go to that little niche thing called impact investment over there, right? And that's where you belong. You really don't want to make money. That's the perception, right? It's changing. It's changing fast, right? Maybe, if you look at Bangladesh, most of your financing sector is banking, right? And you don't have a lot of the venture capital and and the private equity. So you're dealing with banking, which tends to be not only the most regulated right now, globally with Basel and all those aspects. And the truth is, some of that regulation that is in the books right now are not helpful to this transition. I'm giving them a pass here, right? The level of risk and the level of control for risk exposure to the banking sector, right? Sometimes it is so high that when you come to this conversation of impact investment and whatever, they might actually look at you as, too risky for them. So in these years of transition, I would flip the conversation. I would go in, as Rabel said, let me put it this way. You do everything that we're telling you here with SDG and whatever, but you don't have a damn good business plan with a fantastic cash flow and projections and profitability and so on and so forth, you're dead. Then you are an NGO, right? You have to have both. Now, in today's world, in your context, in Bangladesh, to a bank, I would spend 80% talk about your business, profitability, 20% about your impact. Now, if you have a chance to talk to a private equity or a VC in Europe, you might go 50-50, right? Now, hopefully, in a few years, it will change. So you, as pitching your business, going to have to learn, who you're pitching to, and then adjust it. Now, as a business rationale, I would recommend that you follow what we're talking about here, and then you kind of regulated what you're talking about. But I completely understand your frustration. You're not an NGO. You don't want to be an NGO. You know, but I see it. You know, that's a problem. You know, and let's be honest. That's not a problem for an impact business. That's a problem for every SME. I'm 51 years old. You know, access to capital for SMEs, it's a problem for my entire lifetime. You know, we haven't solved that problem. You know, so you are compounding. You can look at this world that we're living in as compounding problems and challenges, or finding new opportunities. So can we solve the long-standing problem of, you know, access for SMEs to capital by actually making SMEs have this whole conversation? And I'll stop here and let Rabel jumping in. One of the things we are very concerned at the G20 is how this whole conversation impacts SME, right? Because you can do two things. You can say, listen, this stuff is so complicated for SMEs, just give them a waiver. Don't make any of this apply to an SME. Fine. The risk with that is, as capital providers buy into this and as they are regulated, it's going to become even more difficult for SMEs to access capital in the future, because they would have to be prepared for this transformation that we are pushing capital providers for, right? But it's pretty clear that you can't impose upon SMEs the same regulatory framework that you're putting into listed companies. So we've actually asked the International Chamber of Commerce, the ICC, to write a paper for the G20 now. We are taking to the G20 Day paper. That means, what does this all mean for an SME? So write a paper with the SME lenses, dealing with all those stuff. How do they join in a way that makes sense to them, this transition that we're talking about? Rabel, do you want to take any of the questions here? There was an issue about the different...
hard to follow up from what you're saying, because you made all excellent points. But I'll go reverse for first to build on what Marcos said to Bipasha, is that just rethinking in terms of not social enterprise, but a commercially successful business that is responsible about its impact, right? And that's how you pitch, and then you keep in mind who you're speaking with. On the point on the difference between ESG and impact, I just perhaps start thinking about ESG that's built into impact. So it's impact goes one step beyond ESG. And as when I mentioned ABCs of impact, ESG is when you are putting the minimum practices in place to avoid harm, so that you're not doing child labor, you're having basic governance structures, you are keeping in mind your emissions. But impact goes beyond that to say, well, what are the solutions that we're contributing to? So think of ESG as the on-ramp where impact is built on top of. So it is the bare minimum that needs to be put in place before you can start thinking about having transformative impact. That's how I would think about it. And just on just one more thing to add to Ion as well. So where do you start with this alphabet soup of all these metrics and taxonomies and framework? Is I think about it in a little bit differently, is that ultimately it's who are you accountable to? And I would think that that's the stakeholders whose lives are changing because of your business activities. And nobody really asks them at the end of the day whether the change is enough for them, or the change, whether the contribution is meaningful. We think about it in terms of, what reporting guideline to think of in terms of investor, but also keep in mind that you have to go back to your stakeholders. And that's really at the heart of the SDG Impact Standards that Marcos was talking about. And we're trying to bring that perspective in, that it's about having good practices as a company, going back to your stakeholders, confirming what impact they are experiencing, making sure that goes back into your decision making. So thinking about it differently rather than getting mixed up which reporting guideline to follow, because then that's just it can be an overwhelming ocean. So putting good practice in place and making sure that, it's all about improving the impact over time rather than complying to reporting standards.
Yeah. Let me take Andreas. I think it's a very interesting point. Thank you for pointing out that we've been here before just to fail collectively. But I think it's very different. The moment is very different. If you take your example of the carbon markets, none of the carbon markets were mandatory, right? You had really, you had a little bit of the Kyoto Protocol. It was never a major international law. And the European Union, right, had an element of carbon market, and then the price of the carbon, collapsed. Honestly speaking, personally, I don't think carbon markets is the most effective way and efficient way to deal with the issue. It's the most perhaps political, sellable way. But you want to be effective and efficient. You want to make the market work as the market, effectiveness, efficiency. It's carbon tax. Put a price on carbon, tax the carbon. That it will be much more efficient than to create a carbon market. Now, what is different now is you have really big jurisdictions around the world, moving to regulate, right? So the EU right now, is there, right? You have to. You no longer have a choice if you are a listed company or an SME up to a certain level from March this year to not disclose, to not report, right? So that's very, very different than anything we had it before. The executive order that came in overnight by the Biden administration puts the United States in a very fast path towards that direction, right? So now, in climate, the failures of the climate in the past are really what is driving the push now, right? So exactly because you're right, we kind of fail on climate, that climate is the dominant factor now. So by the end of this year, you are going to see the vast majority of jurisdictions around the world will have, through central bank regulations, make the so-called TCFD standards mandatory. For those who know, the TCFD is the Task Force for Climate Disclosure, right? Who's been going on for almost 5-7 years, right? And that's going to happen. The Central Bank of my country, Brazil, has already made it, right? So it really is different moment, So it's not a matter of optimism or pessimism. It's a matter of what is going on, right? Now, it is disturbing, being very honest, that so much of the momentum that we live in today, May 21st, became possible because of the change in one government in the world, which was the United States. Now, Europe has been doing it, and Europe has been living, and it's 500 million people, and it's a huge jurisdiction. But a lot of this was stuck because of the previous US administration policies. Now, that then poses a risk, right? We are in the whims of political cycle. There is no doubt about it, which then means if you want to break the shackles of political cycle, consumers have to have a say and change behavior. Business have to start making money and changing behaviors, right? So the whole stakeholder capitalism has to get hold in all stakeholders, not just in one stakeholder. And that's the way you will be able to be less dependent upon the political changes that drive policy. Anything else? Somebody pick up their hands and speak rather than just writing. There's no more. I think we've dealt with most issues in the chat here. happy to take one more question if anybody wants to raise their hand or turn the camera on.
Yeah. I mean, your presentation information was already very rich, and I think we had covered all the questions. Yep, I don't see any hands either. Okay.
All right, so if that's the case, let me wish you luck. You know, you've got our team here to accompany you in this journey. Hopefully, I haven't scared you too much, but rather showed you the opportunity for the future rather than the challenges. It is challenges. I'm adding a lot more complication on your journey, but hope you see that that's the only way you can actually build a business today that will have stain for the long haul, right? You know, don't be discouraged if people think you're an NGO. You know what? NGOs do a fantastic job. You know, I started my career in an NGO, spent 17 years there. I learned everything I've learned, you know, if it makes any sense what I'm saying, in an NGO, right? So, but at the same time, you know you're not an NGO. So flip the narrative. Use the narrative that matters to you, to whomever you're talking with. Sometimes you might want to portray yourself an NGO because you might get a quick money from a foundation, right? You know, be entrepreneur in that sense. But above all, know who you are and know what you want, right? And who knows, maybe in a few years back, you know, I'll knock on your door and ask for a job.
Sounds great.
Thank you very much, everybody. Have a great weekend, wherever you are.
Marcos,
Thanks
thank
a lot.
you so much for
Thank
a
you.
very comprehensive presentation.